So we are ready to start chapter 16. Again, if you didn't hear me on your notes, I apologize. I say chapter 15, but these are the chapter 16 notes, so you may just, correct that. I thought I had, but I hadn't. So in chapter 15, we learned, what managerial accounting was and talked about the cost flows and, the statements and everything. So chapter 16 is just building upon that. In chapter 16, we're going to talk about job order costing. So the cost flows stay the same. You still are going to have materials, work in process, and finished goods, cost of goods sold, 3 inventory accounts and then your cost of goods sold. But there's just a few more concepts we're going to add in. For example, instead of, them just giving us factory overhead, we're going to learn a different method of accounting for factory overhead costs. And we're just going to learn about specifically job order costing. Okay. So again, we talked about cost accounting systems last chapter. And now we're going to look at, there's 2 main types of cost accounting systems for manufacturing. We have job order costing and we have process costing. So job order costing is when we make something that is usually high dollar and unique. So think about maybe like the automobile industry, anything that's like custom build. When I worked in accounting and marketing, I worked for a company that installed audio video systems. So each job was unique, right? We would go out, the engineer would go out, the salesman would go out, they would figure out the customer's needs, they would draw up a plan, engineering would draw up a plan, and then we would order projectors and speakers and microphones and computers and whatever for that specific room or building or whatever we were doing. So that was very job order cost system process. So each job we could trace the materials because we ordered them for that job. So we would actually charge that job when we ordered, the speakers and whatnot. And we could trace labor because anyone that worked on that job would charge their time to that job. So keeping timesheets was not the best fun because in an 8-hour day, I would have to track, the time I spent on different jobs. When I worked in corporate, I just charged all the overhead. But when you work on specific jobs, like if we have an engineer, they have to trace and track their time. Well, I spent 2 hours working on job 101 and 2 hours working on job 102. Because we were billing that client for that time. So we can trace all the direct materials and direct labor to each job. Then we just have to figure out overhead because the company as a whole, like when I worked in corporate, I was a purchaser. So I was purchasing, but when I made a purchase, I would just call a vendor and purchase goods that may be for 20 different jobs. So my time just got charged to overhead. Okay, so it makes sense, right? I was a corporate office working in accounting. So all of those people that are working for multiple jobs just charged our time to overhead. So it's similar to last chapter. We still have that administrative expenses. So in that sense, when we have job order cost systems, we're able to track, like I said, the materials and labor to each specific job and bill them. But with overhead, we have to figure out, and of course we're not talking about just administrative, we're talking more about like factory overhead. How do we know how to charge little parts? Like we would strip cables and cut cables and things like that in our assembly department. So those workers wouldn't track their time to each specific job. They'd be doing cables for all these different jobs. So those were overheads. So what we do is we come up with a system, we're going to learn that in this chapter, of how to figure out how much overhead, factory overhead, to apply to each of these jobs. Okay. So job order costing, how it works is we trace the cost to the job through each inventory process. We order materials. When we order materials and we put them into work in process, all the materials we're using that period still flow into work in process. But now we're charging them to specific jobs. So now we may have 10 jobs in work in process. So we still have materials, labor, and overhead, but they're also being traced to specific jobs. Okay. And then those jobs, as a job gets completed, it gets transferred to finished goods. So it's the same flow, we just have to trace costs a little differently. cost systems, which we'll talk about in a different chapter, next chapter, I think, is when we are making uniform items. We manufacture pens. All pens are pretty much the same. Maybe they're a different color at the very end or something. But you know, the process is the same. We sell them all for the same amount. So cost system is going to be used when we have something that has the same cost, the same manufacturing cost. So it's a different cost tracing system, because then we can look at how many we completed in total. We're looking at batch orders, okay? So we'll talk about process costing in a different chapter. This chapter is focusing on job order. And we talked about that. So, for example, for our little guitar company, they're kind of showing us, you know, how we have like direct materials, and then we have different work in process. Guitars would really be more of a process costing, you know, so we have like different work in process. We have cutting and assembly, and then we have finished goods. And then they talk about, you know, our overhead and everything, and split it up into prime and conversion costs. So that's just the difference between job and process costing. Okay. So again, I kind of already talked about this. When we deal with job order costing, when a job is not complete, it's still in process, it's in the work in process inventory account. As the whole job gets completed, that whole job and all the costs associated with that job transfer to finished goods. And then when they become sold, we transfer them to cost of goods sold. Okay. Usually in job order costing, a lot of times it's already been sold, but when the customer pays for it is when it actually, you know, goes to cost of goods sold. So again, your cost flow is the same. It's just we're tracking per job now. That's the same flow. But notice now, you know, we have materials going into work in process. The only difference in your work in process now is we have different jobs. And then in the warehouse, we have finished jobs. Okay, so we're tracking per job now. But your costs are the same. Work in process, again, still has your manufacturing costs, materials, labor, and overhead. So how we keep track of that is we have like cost sheets for each job. And those cost sheets go through the cost flow. So when we requisition materials, we requisition them for each specific job. And again, we keep on our job cost sheet, we keep materials cost per job. And then as those get, you know, into work in process, we add in labor, we add in overhead. And then once the job is complete, that whole job again with its cost sheet gets transferred to finished goods. So again, the big takeaway point is your cost flow is the same. You're just keeping track per job now. So in this chapter, we're going to start getting back into like debits and credits more. So when we purchase materials, we always debit materials or raw materials, and then we credit either cash or accounts payable. Okay? And this is going to be for all materials, both direct materials and indirect materials. Okay, so any purchase of materials that we make in the period is a debit to materials or raw materials, and then a credit to either, you know, our accounts payable or cash. And then as those job materials get put into specific jobs, we credit the materials account, which we looked at that last chapter, and that's on that manufacturing cost flow. Okay, so they go a debit to work in process and a credit to materials for direct materials. Okay. So we keep track of all of our materials. And there's just kind of showing, you know, we have a materials ledger account that's showing all of our purchases and everything that's been put into play. And again, the only difference now is we show it into the job cost sheet specifically. So each job is also charged for those materials. And that's just kept separately. But your main accounts stay the same. Okay. So again, as far as journal entries we need to know, every time we purchase materials, materials is debited and accounts payable is usually credited because we usually buy materials on account. Okay. And then we have a materials requisition is filled out whenever a job says, I need those, I need that specific material. And then that's when it's moved from the raw materials into work in process. And we talked about the job cost sheets. So when we go from materials that we've purchased to adding those materials, charging them to jobs, again, we're just moving from materials to work in process, which we looked at last chapter. So it's really the same. So now we have a work in process debit and a credit to materials to show those materials being put into the different jobs. Okay, so again, that's direct materials. So that's materials. Again, it's really just a review from last chapter. The only difference is we're charging it to specific jobs, but it's all in work in process. Same with labor. As I was saying, you know, individuals that work on different jobs have to charge their time to each specific job. But labor is handled the same way we handled it last chapter as well, as far as we added into the work in process. So direct labor gets charged to work in process. Wages payable gets credited. We're going to pay them, you know, at a later date. We're just showing where their time was worked. Okay. So work in process, again, gets debited for direct labor. No difference there. Factory overhead, again, as a review from last chapter, are all the factory costs that aren't direct materials or direct labor. So factory overhead's indirect materials used, indirect labor, utilities and rent, any depreciation on factory equipment. And it kind of talks about, again, you know, indirect materials could be materials we use on all the different jobs that it's kind of hard to trace, you know, directly to the product. Indirect labor would be like your production supervisor salary, maintenance wages, that sort of thing. So now you'll notice here we have a little bit of a difference on how we're keeping track of our factory overhead. So in last chapter, we just charged, you know, any factory overhead we charged to the work in process. We still are going to, but we're also going to keep track of our factory overhead. Okay. So our factory overhead account is, as you see on your notes too, factory overhead. Factory overhead account, in this case, it says we incurred $4,600 of overhead during December. $500 of that was indirect materials, $2,000 indirect labor, $900 utilities, and $1,200 factory depreciation. And it tells us our indirect materials were glue and sandpaper, just to kind of support what we were doing. So when we want to charge that, all of those these are actual costs of overhead in the month. So all of these actual costs get debited to factory overhead. So factory overhead, as far as our debits and credits go, actual costs get debited to factory overhead. Okay. That's at the end of the month. So those are all of our factory overhead costs, and they're showing you what they credited here. So materials got credited for indirect materials, wages payable got credited for indirect labor, utilities payable for lights and all of that, and then accumulated depreciation got credited for the factory depreciation. So that's kind of a new, we didn't do that last chapter. Okay. So again, factory overhead is different. It's an indirect cost. All of our factory overhead are indirect costs. So how do we figure out how much overhead? We had, I think it was like $4,600 of overhead in the month of December. Well, how do we figure out how much of that to apply to all the different jobs? Because we have jobs that are in work in process, and we have jobs that are in finished goods too. So can we just like, oh, we have 5 jobs, we'll just divide it by 5 and apply overhead? We could, But what if one job took like 4 months and another job took like 1 month? What if one job was, 500,000 and another job was 20,000? Does it make sense to apply the same amount of overhead to each job? Right, yeah. So it's like if one job's taken more labor and is more costly, shouldn't it get more overhead costs? Because it's taking more overhead, isn't it? It's taking up more factory time and it's taking up more, indirect labor, indirect materials. So for this reason, we estimate our factory overhead for each month ahead of time, and then we have an allocation method that we use. Because we won't know our factory overhead costs for the month until the end of the month. Those actual costs we'll know at the end of the month, how much labor, materials, and then all the other stuff. So instead, because we might have jobs that have already been completed and billed out in the month, we need to figure out a method to apply overhead as these jobs go through work in process. So now what we do is we look at factory overhead, we estimate, and we can do a pretty good estimation. We know historically how much, materials, labor, indirect materials and labor, and all of our fixed overhead's pretty easy, right? Rent, utilities, and things like that, and depreciation. So we can kind of estimate what our overhead will be for the month, and we take that estimation, and a lot of times we apply it based on the labor cost, the direct labor cost of a job. So we look at, well, the more labor a job took, then probably the more overhead should be charged to it. So we charge based on what we call an allocation rate. Okay, so we have a cost allocation. So we look at usually what we call the activity base or activity driver for factory overhead is going to be direct labor. We're going to look at how much labor did we charge to this job, and we're going to apply overhead as a percentage of that labor. Okay? And they kind of tell you that. It can be applied by direct labor hours, direct labor cost. Another one might be machine hours if we have a lot of machinery-driven production. Okay? So we consider that an activity driver or a cost driver. And then we're going to come up with a predetermined factory overhead rate. Okay? So factory overhead costs are allocated to jobs using a predetermined factory overhead rate. So what we do is these are all estimates. So we're looking for the future, right? At the end of December, we're going to look and forecast for January. So we're going to take our estimated total factory overhead costs and divide them by whatever the estimated activity base is. In a lot of cases, that'll be like direct labor costs. Okay. So then we're going to get some type of rate. So it says, assume that Legend Guitars estimates the total factory overhead cost as $50,000 for the year, and the activity base as 10,000 direct labor hours. So they're basing it on direct labor. Again, these are estimates. So we would truly just take 50,000 divided by 10,000 hours, and we would apply overhead at $5 per direct labor hour. So if a job had 10 hours of labor on it, 10 times 5, we would charge them $50 worth of overhead. That's a very small scale, right? So I don't have to do hard math in my head. But that's how we're going to apply overhead. So when we're in work in process, that job's in work in process, we know it's materials and labor costs. We'll apply the overhead costs to it as well. Okay. The factory overhead, you'll have your separate materials. Each job will have direct materials, direct labor, and then that applied overhead cost. We're just basing it on their direct labor. We're not talking about that. So again, when we actually go and apply overhead, job 71, we added their total hours of labor, 350 hours. We multiply by 5, which was that predetermined overhead rate. So on their job cost sheet, they have direct materials were 2,000, direct labor 3,500, and now we're adding in the overhead cost of 350 times 5, 1,750. That gives us a total job cost that helps us determine how much to charge the customer, you know, what our actual costs were. And then over on the right, job 72 had 500 hours of labor times $5, so their overhead was 2,500. So it's just a method. Again, it's an estimate, and we're allocating costs. This is as we go through the month, we're applying this overhead. So chances are, you know, what we've actually applied to the jobs isn't going to equal our actual overhead costs. So we're going to deal with that too. Fun stuff, right? So in this case, you know, on the 2 jobs that were completed, we applied factory overhead of $4,250. Applied overhead is the amount that you're debiting to work in process. Okay. So in our factory overhead account, we put our actual cost as a debit to factory overhead. So this was done at like the end of the month. Okay. And these were our actual costs. Our applied overhead is a debit to work in process, just like it was last chapter, and a credit to factory overhead. So my factory overhead gets credited for any applied overhead. Okay. So we debit work in process because those are the costs we're actually charging to the jobs, and we credit factory overhead. So again, factory overhead is debited for actual costs and credited for applied. So again, we're estimating. So a lot of times at the end of the month, our actual and applied are different numbers. So we have to deal with that. So, well, what happens and what do we deal with that? So a lot of times we can have actual overhead, again, is different than applied overhead. So we'll have either an ending debit balance or an ending credit balance, right? If our actual costs were greater than what we applied, we would have an ending debit balance, okay? That would be under applied, okay? So if we have an ending debit, we under applied. So that's when actual is greater. So when our actual costs are higher than what we applied, it makes sense, right? We didn't apply all of our overhead. So when actual overhead is greater than applied, we'd end up with a debit balance. That means we under applied overhead. And I have that on your notes. If we applied more than our actual, then we over applied. Okay? So if we have a credit balance, that's going to mean we over applied.
Which one is the estimate?
The applied. So yeah, this is the estimate debit to work in process. Okay. So yeah, your applied costs are what we charge to the jobs. It's an estimate and it's debited to work in process. So basically, when we have a credit balance in the factory overhead at the end of the month, that means we charge the jobs more overhead than we actually incurred. Yeah. Whoopsie, no. You know, we hope to minimize this balance, right? Our plan is to estimate as close as possible, but things happen. We can't always be equal, and a lot of times you won't be equal. Okay. So in our case, we had an actual cost of $4,600 and an applied of 4250. Okay. So what that resulted in that case, they're showing some, they're showing both. But when our actual costs are 4,600 and our applied, in our case, was 4,250, actual is greater than what we charged to the jobs. So we under applied by what, $350? Okay. So in this case, we under applied by $350. So what that means is we didn't charge the jobs enough overhead. So that means that's a cost on us, okay? When we under apply, that's a cost to our company because now we didn't apply enough cost to the different jobs. So now we have to basically eat that cost. So what happens is we need to figure out what to do. So at the end of the year, we need to do something with that factory overhead balance, okay? So we can't just carry it over year to year. You're like, whoopsie, that's just a cost. We'll just carry it over to next year, deal with it next year. No. We have to deal with the balance and factory overhead in the current year. It's like a temporary account. It is a temporary account. So every year we zero it out and move on because we want it, it's associated with the job costs in the current year. So if it's under applied, we need to charge that to cost of goods sold. So we would take the balance, debit cost of goods sold, and credit factory overhead. Okay, so in this case, that would be $350. When we do that, because our balance was, kind of ran out of room here, we had a $350 debit balance, right? $350 debit balance. When we charge it to cost of goods sold, that's charging it to our costs and reducing our revenues. And then what we're doing here, we're zeroing it out. Okay. Well, it'd be zero over here, really, I guess, technically. Okay, when we credit it, we're zeroing it out. Okay, so that's the point. We always want to, at the end of the month, we want to make a journal entry that zeroes out factory overhead. So if it has a debit balance, obviously we need to credit it. And your debit is going to be to cost of goods sold. Okay. And as you can imagine, it would be the opposite when we're on the over applied. So if we apply too much, well, it's reducing our cost of goods sold. Seems better, right? So we would do the opposite. We would debit factory overhead and credit cost of goods sold. Okay. And those are on your notes, but just to kind of go over it. So your main goal at the end of the year is to do basically an adjusting entry to zero out factory overhead. So you just need to calculate, you know, balance it, and then do your journal entry to zero it out. Okay. So as you can see, if you know the balance, then you know you just do the opposite to close it out. So that's one way to remember what you need to do. If factory overhead has a debit balance, you know you're going to have to credit it to zero it out. If it has a credit balance, you know you're going to have to debit it. And then just know it's always charged to cost of goods sold. Any questions on factory overhead? And there they're showing cost of goods sold, debited, factory overhead, credited. For under applied. Okay. Any questions on that? Well, let's go to our practice and do a couple of examples in it before we move on. So from Canvas, go ahead and open your chapter 16 practice. Okay, so this very first one is on applying factory overhead. So we're going to calculate a predetermined factory overhead rate. So it tells us Bergen Company estimates total factory overhead costs will be $620,000 for the year. Direct labor hours are estimated to be 80,000. So those are both estimates. Part A says for Bergen Company, determine the predetermined factory overhead rate using direct labor hours as the activity base. Okay, so everybody else has this. Right? Let me get rid of it. So remember, our predetermined overhead rate is going to be our estimated total overhead divided by our estimated activity base. So what's my estimated total overhead? Yeah, it's just the 620,000. And what's my estimated activity base? 80,000. And that's direct labor hours. Okay. So we have a total estimated overhead that they gave us of $620,000. And direct labor hours are estimated to be 80,000. So direct labor hours is our activity base. So what's my predetermined factory overhead rate?
$7.75.
Very good. $7.75 per direct labor hour. That's what that means. When our activity base is in hours, direct labor hours, we're going to apply overhead at the rate of $7.75 per direct labor hour. So these are applied. This is how we're calculating that credit to factory overhead, the debit to work in process, credit to factory overhead. So part B says during May, Bergen Company accumulated 2,500 hours of direct labor costs in job 200 and 3,000 hours on job 305. What is the amount of overhead, the total overhead applied in May? Well, how many hours total did we have? How many direct labor hours? Yeah, 5,500, good. So 5,500 hours times 7.75. Very good, $42,625 of overhead. That's pretty easy, right? $42,625. What's my journal entry to apply factory overhead?
Work in process and factory overhead.
Very good. We debit work in process, and we've already calculated the $42,625, and we credit factory overhead. Debit work in process, credit factory overhead. So that's an applied overhead. Any questions on that one? All right. Let's move to the next one then. This one looks longer, right? So the second one, we're still dealing with predetermined overhead rates. Spring Street Engine Shop uses job order costing to determine the cost of performing engine repair work. And it tells us our estimated costs and expenses for the coming period are as follows. So these are all the costs, you know, both product and period costs, both, you know, all of that. So we have direct, indirect, everything listed here. And it says the average shop direct labor rate is $30 per hour. Says determine the predetermined shop overhead rate per direct labor hour. Okay, so we're really doing the same thing, but we need to estimate, we need to figure out what is our total overhead, and then we need to estimate our activity base. They said it's direct labor hours, so we need to know our total direct labor hours. Okay, so first of all, what are my overhead costs? Let's go through this. Is our engine parts an overhead?
No.
No, that'd be direct materials. Shop direct labor? Well,
No.
it's direct, right? How about shop and repair equipment depreciation?
Yes.
Yes. So my overhead is going to equal 44,500 plus. What about shop supervisor salaries?
Yes.
Yes, that's an indirect labor. Shop property taxes.
Yes.
Yes. If it says shop, right, and it's not direct, so that's 27,500. Shop supplies.
Yes.
Yes, that's an indirect material. Advertising expense?
No.
No, that's a period expense. Administrative office salaries?
No.
Period. Very good. Administrative office depreciation?
No.
No, period. They listed them in order, didn't they? So we had direct materials, direct labor, overhead, and period costs. So, okay. So these are my only overhead costs, those 4 costs. So what's my estimated total overhead? Should just be 220,000. You're close though. I think you added an extra in there. But yeah, 220,000. Okay. So I know that's my estimated total overhead. So I have my first part of my equation. Okay. That's my overhead. So I just added those 4 up. That's my estimated total overhead. But we know our estimated activity base should be direct labor hours. Do I know my direct labor hours? How much are my direct labor hours?
660,000.
So are those hours?
That's the rate. So you're doing that into over.
Equals 25.
You're going to divide the 660 by the $30 labor rate.
Right. Yeah, I think you're on the same path, Daniel. You're just going about it a little differently.
I'm doing the same problem on the phone.
Okay. You're like different number, but yes. Yeah, what we need to calculate is direct labor hours, right? So what we want to do is we want to take our total dollars of $660,000 of labor and divide it by the labor rate of $30 per hour. That'll tell us how many hours we have of direct labor. Okay, so that's 22,000 hours. So this one's just a little trickier because they told us we wanted to, calculate a predetermined overhead rate based on direct labor hours. So when they told us it's based on hours, we had to calculate the actual hours. Okay, so we took our total labor cost and divided it by the labor rate of $30 per hour.
The 138.5 is just 138.
Oh, so it's my fault. Sorry, Jaylee. See, thank you,
And
Desiree.
I'm looking-
You weren't looking at mine?
I wasn't looking at that.
Oh, you were looking at mine. That's what I'm saying. That's why I made you calculate it wrong, because I wrote it down wrong.
I was thinking, it's like, there's 3,500.
You're like, I'm not crazy. It's like, you're crazy, Lockmeyer. Come on. Sorry. See, I was like, I added the right numbers, but wrote the wrong ones. Just, throwing in that extra layer of complication for you guys. Sorry. But thank you for catching that. So now we have the hours. So we have our estimated total overhead and we have our estimated activity base. They made this one nice and easy, right? So what's my predetermined overhead rate? 10. $10 per direct labor hour. $10 per direct labor hour. Any questions on that one? You're not following?
So to get, where did you get that 66?
The 660,000 was my total direct labor cost right here. Yeah. So I had to figure out direct labor I had to figure out my direct labor hours. Any other questions? Okay. Okay, well, we're good right now on the problems. Let me